IFRS 16 Leases. Presentation in the financial statements of the lessee. Please refer to IFRS 16, paragraph 47 to 49. The following is required as presentation, first of all, in the statement of financial position. The following items must be presented separately, either in the statement or in the notes. The right of use asset must be presented separately from other assets. Lease liabilities must be presented separately from other liabilities. Please note, for FRK 201 purposes, separate presentation on the face of the statement of financial position will be used. We will not make use of the option to separately present in the notes. In the statement of profit or loss and other comprehensive income, the following items must be presented separately. The interest expense on the lease liability. This is a component of finance costs that must be presented separately in terms of IAS 1. And then also your depreciation charge for the right of use asset. Class example 13 will illustrate the presentation in the books of the lessee. Use the information provided in class example 6, 9, 10, 11 and 12 for Rocco Limited. Those examples dealt with the initial and subsequent measurement of both the right of use asset and the lease liability. So all of that information will now be used for purposes of presenting that information in the financial statements of Rocco Limited. Again, be careful that you understand the difference between presentation and disclosure. Presentation refers to the line items on the face of the financial statements, as opposed to disclosure that would deal with the notes. Presentation of this lease agreement in the financial statements of Rocco Limited for the year ended 31 December 2017 will then be as follows. We have a proper heading, Rocco Limited, Statement of Financial Position as at 31st December X17. Please note that comparative information would then be required unless specifically excluded from the required section. Under assets, we will then have as non-current assets the right of use asset. This is important that you note that I present the right of use asset as a separate line item. It is not included in your property, plant and equipment line item. Let's have a look how we calculated those balances. The right of use asset will be presented on the face of the statement for financial position at the respective carrying amounts. Calculation of the carrying amount of the right of use asset. In class example 6, we calculated the cost of the right of use asset as 16,539,498. Then for the year ended 31st December 2016, we calculated the depreciation. That was done in class example 11. It was over a 20-year period calculated as 826,975. That then gives you the carrying amount at the end of 31st December 2016 as 15,712,523. Nothing has changed nothing changed the carrying amount of the right of use asset other than having to calculate depreciation again for the year ended 31st December 2017. So that is the same depreciation expense, and I have a carrying amount at the end of 2017 of 14,885,548. So if you refer back to your statement of financial position, you will find the 15,712 as your comparative carrying amount and your 14,885,548 as your current year carrying amount. If you now refer back to the line items on the face of the statement of financial position, we have to separately disclose the lease liability. Under non-current liabilities, we have a lease liability balance, but if you look at the solution, we also have a portion under the current liabilities heading, and that is referred to as the short-term portion of the lease liability. Let's first understand the principle under splitting this balance between a non-current and a current portion. Your current liability short-term portion would relate to the capital portion that is repayable on this lease liability within the next 12 months after year end. So first of all, you need to determine what your outstanding balance at year end is on that lease liability, and then determine how much of that balance in terms of the capital portion will be repaid within the following 12 months. That is an IAS 1 principle of splitting your liabilities between a current and a non-current portion. So let's have a look at the calculation of these amounts. So this is the calculation of the carrying amount of the lease liability. The initial measurement of the lease liability was determined in class example 9 as 15,789,498 in the following manner. This was the variables that we input into the financial calculator. So you have to make sure that that is the variables that you have input into your financial calculator for purposes of using the amort function to split the outstanding balance between short-term and long-term. So let's have a look at what we present for purposes of 31 December 20x16. The total balance outstanding is 15,584,238. That is now after you have added interest for a year and deducted 1 year's payments. You can determine that balance by using your financial calculator's amort function. It's the first period amort, and it's the balance variable that you're looking for. Of that balance, the portion that will be payable within the next 12 months, which would represent the short-term portion, is then the second period, the next year. We're busy with the first year, so it's the next year's amort function, but now you only make use of the principal variable, the capital portion that will be paid within the next 12 months. That represents your short-term period. If you then deduct the short-term portion, it gives you the long-term portion on 31 December 20x16. You then do exactly the same for the balance outstanding on 31 December 20x17. That is now your second period's outstanding balance. So you use the variables that we have identified up here. You input the second period in your amort function and you determine the outstanding balance. The third period, the X18 period's principal repayment, would then represent the capital portion that is payable in the next financial year, and that is again your short-term portion for presentation purposes. In the end, you still present the full liability outstanding, but you have to, for IAS 1 purposes, split that presentation between a short-term and a long-term portion. If you now refer back to your presentation on the face of the statement of financial position, you will identify these amounts on there. Your long-term portion for X16 will be presented as the 15 million, your short-term portion as the 229,891, and then for 20x17, your long-term portion will be the 15,096,869, and the 257,478 will be your short-term portion. Let's have a look at the presentation in the statement of profit or loss and other comprehensive income for the year ended 31st December 2017. Again, I have a comparative period unless the contrary is stated. Included in your other expenses, please note we present our statement of profit or loss and other comprehensive income based on the function of our expenses and income items. So we will not have as a line item depreciation or maintenance expense. It will be included in the line item other expenses. In the notes, which we will look at in a separate example, we will disclose the nature of these items. So included in our other expenses for both years, there will be a depreciation expense of 826975 on the right of use asset, and remember the 300,000 maintenance expense that was recognized through profit or loss. Then, as part of your line item net finance cost, we will have the finance cost relating to this lease contract. Again, if you've input the variables identified above, you can make use of your amort function to identify the interest portion of each payment. Just make sure that you use the correct periods. For 20X16, it was the first interest period, and for 20X17, the second interest period.